But unless you can actually put the trade on effectively and correctly, those indicators will have zero effect on the act of running. So let me give you a concrete example. If we're trading a lane and we're looking to trade the market as it's bouncing in the direction, say, of the overall trend, and we want to trade the market here. If for some reason our psychology, meaning we're afraid, or we're greedy, meaning greedy, we're waiting for the market to get way, way down here, or we're nervous about getting in, we're just not sure if we want to take the risk, if we don't enter the trade correctly, we could very easily get in too late up in this area here, see the market move in our direction, make its natural retest back, and we could get scared out of the market, or we would have to get out of a position that would later on work because we simply could not afford the risk. So even though our analysis was correct, even though we had all of the available tools, it was our psychology that caused us to miss the trade. This is something that's very common. In fact, if you read Market Wizards, you'll find many examples of this, even in professional traders today. Men and women that are making millions and millions of dollars a year that are consistently focusing on psychology because they realize that even at their level of skill, their psychology still plays a huge role in their performance, just like it would for Tiger Woods, just like it would for Shaquille O'Neal, just like it would for Barry Bonds, any athlete, or even CEO like Donald Trump or Jack Welch when he was conducting business, or even high-level politicians, for example, the president or a high-ranking member of the Senate. They all realize that their psychology, how they react in a given situation, plays a huge role in their overall performance. So let's talk about your beliefs. Now, your beliefs about the market have much more of an impact than you probably realize. Now, let's take a look at what exactly do I mean by beliefs. Now, these are some definitions I got off of the internet. I simply went into Google and did a search, and you can see here that the Wikipedia says that belief is an assent to a proposition. Hypnosis.edu says that beliefs are knowns in the subconscious. The University of Texas says that beliefs are assumptions about what is true or false that can be testable, for example, family preservation works, or that are not testable, i.e. that God does indeed exist. So how do these beliefs affect our trading decisions? If, for example, we're making these assumptions about what is true or false, how do these assumptions affect the way we look at the market? How do these knowns, if it is a known, how does that affect the market? How does the belief? You can see that there are many, many definitions. How do all of these affect how we are making trading decisions? Well, if you take a look at this chart, and I asked you where's the market going, you probably saw this upward trend, didn't you? That the market was moving up. And you probably made that decision without looking at any other information on the chart. In fact, you didn't look that it was a 60-minute bar. You didn't see that we're only looking at a couple days worth of chart pattern here. You simply looked at the chart and instantly made a decision. Well, studies and researchers have found out that we make decisions and judgment calls almost mind-bogglingly fast. In fact, some studies suggest that we're doing it in less than a second. In fact, some of them suggest we make decisions in 0.004 seconds. Okay, now let me give you an example. If you place your hand on your desk or on the table in front of you. Now I want you to flip your hand over so that the palm is up. Put it palm down, palm up. Palm down, palm up. When your brain is sending that signal to your hand, that takes 0.03 seconds. Look at this. This is how fast you're making a snap decision. That's incredibly fast.